Alberta Premier Danielle Smith is committing about $14 million to develop a proposal for an oil pipeline that would go to the BC coast. Our guest says that the province should be paying attention to what the private sector is doing here. It is not at this stage proposing a new pipeline. We're joined by Janetta McKenzie, Director of the Oil and Gas Programme at the Pembina Institute. Janetta, great to have you join us. Tell us why you're critical of this Alberta plan or proposal.
Yeah, thanks for having me, Andrew. I think the really key thing to keep in mind here is that if a new pipeline promised to be really profitable and had a really strong business case, there would be a private sector proposal in some stage of development at this point. So it does say something that after months of pressure from the Alberta government to bring forward a proposal and offers of a kind of concierge service from Ottawa in the form of the Major Projects Office, there is still no private sector proponent for a new bitumen pipeline in Alberta. And, to be clear, this is a years-long, decades-long gamble, really prefaced on the hope that the world will not reduce oil consumption, despite lower cost alternatives, despite the increasing risk of climate change, and despite the fact that even sector forecasts from industry players like BP, Equinor, Shell, even under quite low ambition scenarios, are still seeing oil demand begin to peak in the early 2030s, right when this theoretical new pipeline would come online. So it's a bet that it's not really surprising that private sector proponents aren't willing to take on at this point. So it does beg the question why the government of Alberta is moving forward with it.
I mean, you can't really blame companies for being reluctant to go forward because it's still really in a state of uncertainty just how much Ottawa will do to facilitate this kind of project.
Yes, there is still quite a bit of uncertainty, of course, for the oil and gas sector and for all sectors as to what the role of something like the Major Project Office is. But we know that the Major Project, as it says on the tin, is meant to evaluate major projects and whether they should be fast-tracked or accelerated. And certainly there are lots of avenues for the private sector to take their case to the federal government and make the case for a pipeline, again, if they feel that there's a good reason to do so and a good business case to do so. But we just haven't seen that yet. And in particular, the government of Alberta is putting up $14 million to begin to plan and design this pipeline, which for the private sector in particular is a comparatively quite small spend. So if the entrance fee here is that sort of $14 million, why won't the private sector even put that up at this stage? And it is because, we're entering into a stage of stagnating and eventually declining market demand, which just doesn't really underpin the business case for a new million-barrel-a-day pipeline.
You may have seen that the Premier, the Alberta Premier, appeared on CTV's Power Play, and my colleague Vashi Kapelos asked her, well, how much are you willing to put up here? She wouldn't be drawn on that, probably smart not to make a commitment. But she certainly said, are you asking me if I have $34 billion kicking around to be able to pay for this? No, I don't. And I guess that's a reference to the massive cost overrun on the Trans Mountain expansion.
Yes, absolutely. That is what the Trans Mountain expansion ended up costing. And I think it is a good case study to refer to when we're thinking of the capital cost of a project like a new Alberta BC oil pipeline, not to mention all of the consultation that is a key part of a big project like this and can't be rushed. These projects can balloon in cost quite quickly, which is, again, another reason why we would caution the government of Alberta from putting taxpayer resources towards something like this.
But you can't really blame Alberta. I mean, they've got this oil. It's a unique global asset. It'll last for decades. Economically, they'd be unwise to just leave it sitting on the ground.
Yeah, and there are, we think, some more cost-effective and short-term measures that could help some of that resource get to market. First of all, the Trans Mountain expansion pipeline is not yet operating at capacity, so there's still room to fill that pipeline up to its full capacity, and there is the opportunity to maximize the efficiency and maximize the use of that existing infrastructure, which could unlock several 100,000 barrels a day of additional tidewater access and kind of oil pipeline capacity. And that could be done in the shorter term. It's lower risk. It would work with existing infrastructure, and it would give a little bit more access for the sector to get to the BC coast without sinking again. Billions of dollars would be the final price tag of a brand new bitumen pipeline out west that does not have the private sector attached to it yet.
Where do you think this will go? Do you think we will end up seeing big taxpayer subsidies for another pipeline?
Well, I would really caution against that. I think that is a line that does need to be drawn. If the business case for this type of projects exists, then the private sector needs to step up, make their case to Ottawa, make their case to the major projects office, because there is obviously quite a bit in it for them if there is a strong business case. And if the business case isn't there, then there are other options for the sector to maximize the infrastructure that they already have.
I just got to ask you about this one. I wonder, is Mark Carney happy to see, the Prime Minister, happy to see this pipeline, this headline, not pipeline, headline in the Wall Street Journal today? Mark Carney's shift from climate change warrior to fossil fuel cheerleader. Is that being a bit unfair to Mr. Carney? Is he a fossil fuel cheerleader, would you say?
Well, I wouldn't use those words, but I think that what headlines like that do suggest is that there are some steps that the federal government can take to really emphasize and tighten up their existing climate regulations. One is industrial carbon pricing, which we've seen pop up in the media in the last several weeks. This is a really key foundational piece of emissions reductions policy in Canada that the Prime Minister has also cited as an effective way to incentivize investment in decarbonization and investment in low carbon emerging sectors. It's also a system that needs some tweaking in order to make those carbon markets work, particularly in Alberta, where we've seen recent announcements in the last couple of weeks that may weaken that system further. So there's a real opportunity here to tighten some key climate and decarbonization regulations, which would really go a long way.
Thank you very much, Janetta. Really appreciate it.
Thank you very much.
Janetta McKenzie, Director of the Oil and Gas Programme at the Pembina Institute.